This is Kurt Heisinger, accounting professor at Sierra College and author of Managerial Accounting. This video describes how to use activity-based costing in a service organization setting. The activity-based costing in a service organization setting is much like activity-based costing used for a manufacturing company. So you may want to take a look at the two videos that have been posted, part 1 and part 2, related to how to implement activity-based costing, and that will provide the detailed steps of how to implement activity-based costing. The focus here is on service organizations and activity-based costing. So essentially, looking at the first step, bullet point here, the same 5 activity-based costing steps are used in service organizations. So I'll do this briefly. I'll just list the 5 verbally. The first step was to identify costly activities. The second step was to assign overhead costs to the activities that were identified in step 1. Third, we identify the cost driver for each activity. Fourth, calculate a predetermined overhead rate for each activity. And fifth, allocate overhead costs to products. The same applies to a service organization. One of the things that should be noted here, however, is that direct labor costs tend to be very high for service organizations. That's what they do. They provide a service which typically requires labor. And direct material costs are relatively small because we're not building a tangible product in a service organization. Let's go through an example of how activity-based costing might work for an accounting firm. And that's what you see here with these two charts. Let's assume that we have an accounting firm that has 2 different products that we offer to our customers, and they're listed here. We have a tax product, that is, we do taxes for our customers, and an audit product where we perform audits for our customers. There are 3 different activities that we have identified as being significant, and you see those here. So scheduling and data entry related to our clients, that is scheduling our clients for appointments and entering data for our clients. That's one activity, and that activity costs about $400,000. We advertise in journals for both of these services that we offer, tax and audit, and the cost for those advertisements is about $100,000. And we have computers that are used by both the tax and audit departments, and those costs are about $500,000. So we've got the activities outlined here, we have the estimated overhead costs outlined here as well, and of course we have the cost drivers. So the number of clients will drive the costs associated with the scheduling and data entry for each client. The number of ads drives the costs related to the advertising in journals, and computer hours drives the costs related to computer usage. Now what we're going to do, given this information, is to take the estimated overhead costs. This should sound familiar now. It's the establishing the predetermined overhead rate. We're going to take the estimated overhead costs and divide that by, for each activity, by the total estimated activity in the allocation base. This bottom chart is just a continuation of the top chart. And if you take $400,000 right here, divided by 250 clients, we come up with a predetermined overhead rate of $1,600 in the bottom chart per client. Now we're going to take that rate and multiply it by the cost driver activity for each department, for each service that we offer, to determine the amount of overhead allocated to each of those departments. So for example, scheduling and data entry, we're going to take $1,600 per client and multiply that times the 150 clients that are associated with the tax area, and that gives us the balance of $240,000. So $240,000 in overhead will be allocated to the tax department. And we do the same math for the audit department. We'll take $1,600 per client times 100 clients for the audit department, and that means that $160,000 in overhead related to this activity gets allocated to the audit department. We do that exact same math for the other 2 activities to get the amount of overhead that's allocated to each of these departments. $90,000 related to advertising for tax, $250,000 related to computer usage for tax, and so on. And now that we have our overhead allocation amount right here and right here, we'll total it up, and we'll see that we have $580,000 in overhead that's been allocated to the tax area and $420,000 that's been allocated to the audit part of our company. So again, using activity-based costing in a manufacturing setting and in a service organization setting is similar. we're simply taking away direct materials. That goes away for service companies, and we are allocating overhead now to service areas, service departments, rather than tangible products. But the same 5 steps apply. It's also important to note here that we need to add direct labor to the costs that you see on this slide. So we're only focusing on this slide on the overhead costs that are related to tax and audit. We would add to that direct labor costs, and that would give us the total product cost, in this case really a service cost. And from there we can figure out the profitability for each service that we offer, tax and audit, by taking total revenue for each service for the tax department and the audit department and subtracting the product costs.